The US dollar is flashing a major warning right now, and anyone who has watched global markets for long enough knows exactly what this usually means. Every time the dollar weakens this quickly, it signals that something beneath the surface is shifting, and when the dollar moves, the entire global system reacts. You can already see it in gold and silver. They're not just inching up, they're reacting instantly, as if they're picking up a signal most people haven't noticed yet. And here's the part that should make you pay attention. The combination we're seeing right now of falling dollar, rising metals, and unstable treasury markets has not happened in years, and it has never happened without something bigger coming right after. Whenever the dollar breaks down like this, a global shock normally follows. We saw it in 2008, 2020, 2022, and now we're seeing the same early signs again. The question is no longer, why is this happening? The real question is, are you seeing the same warning the insiders are seeing? Or is this going to catch you by surprise like everyone else? The dollar isn't just drifting lower, and it's being pushed down by a series of powerful forces all hitting at the same time, and none of them are temporary. The first pressure point is the Federal Reserve. For months, the Fed has been hinting that rate cuts might be coming sooner than expected, and markets are already pricing that in. Lower rates instantly weaken the dollar because investors get less return for holding U.S. assets. Then you have the U.S. government's exploding deficits. Washington is borrowing at a pace the world hasn't seen before, and every new round of debt puts more strain on the dollar's credibility. Treasury auctions are starting to show the cracks: fewer buyers, weaker demand, and higher yields needed just to convince investors to step in. That is a major red flag for global markets. At the same time, international confidence in the dollar is slowly eroding. Foreign central banks are reducing their U.S. bond purchases, not because they hate the dollar, but because they don't want to be overexposed to a system that is getting riskier every year. BRICS nations, the Middle East, and parts of Asia are quietly buying fewer dollars and more gold. And this matters because when the largest global players diversify away from the dollar, even subtly, it sends a signal across the world. The dollar is no longer as untouchable as it once was. Put all of this together: potential rate cuts, massive deficits, weak treasury demand, and global investors stepping back, and the result is a dollar that is falling for deep structural reasons, not because of a short-term news cycle. This is the type of decline that usually leads to something bigger. Whenever the US dollar weakens sharply, gold and silver almost always react in predictable but powerful ways, and understanding this relationship is key to seeing what's coming next. Gold is the ultimate safe haven when confidence in the dollar fades. Investors rush to gold to protect their wealth. Historically, every major dip in the dollar has been accompanied by a significant rally in gold prices. Silver, on the other hand, is more volatile but reacts even more dramatically. Because silver is both an industrial metal and a store of value, it tends to spike when fear meets demand from investors looking for safe assets. Looking at the past cycles makes this clear. In 2008, when the dollar tumbled during the financial crisis, gold surged as panic spread through the markets. In 2020, during the COVID-driven economic shock, gold hit new highs almost overnight as trillions in liquidity flooded the markets, while silver experienced sharp, volatile swings. In 2022, as inflation remained stubbornly high and the dollar softened slightly, silver spikes outpaced gold, showing its unique leverage to market volatility. Smart money always moves into these metals first, quietly building positions before the wider public reacts. And right now, we're seeing the same early signals forming again: gold stabilizing near key breakout levels, silver responding with more pronounced moves, a pattern that has repeated through every major period of dollar weakness. This time, the dollar's weakness isn't just a temporary blip caused by a single economic report or short-term market sentiment, it's the result of deep, structural problems that make this situation far more dangerous than usual. The US debt is spiraling faster than economic growth, with deficits at historic levels, meaning the government has to keep borrowing more just to stay afloat. At the same time, treasury markets are showing cracks, auctions are weaker, fewer buyers are stepping up, and yields are rising just to attract attention, signaling real stress in the backbone of the financial system. Meanwhile, the global picture is shifting. BRICS nations and other large economies are actively reducing their reliance on the US dollar for trade and reserves, quietly diversifying into gold and other currencies. Inflation, although cooling in some areas, is far from fully under control, which limits the Fed's options. The central bank can't just cut rates without risking inflation spikes, and it can't hike aggressively without risking a recession, leaving policymakers trapped in a very narrow corridor. In short, this isn't a dollar decline caused by a temporary hiccup. It's a structural breakdown in confidence, both domestically and globally. And historically, when confidence in the dollar falters at this level, the fallout isn't gradual, it happens suddenly, hitting markets and investors hard. Right now, gold and silver are setting up for a potential breakout the likes of which we haven't seen in years, and the signals are stacking up across multiple fronts. Gold is approaching long-term resistance levels that have historically acted as a ceiling, and each test brings the potential for a sharp, explosive move higher. Silver, which is naturally more volatile, is even more interesting. Supply is extremely tight. Industrial demand is rising for everything from electronics to renewable energy, and investor interest is surging again. ETFs and large institutional flows are quietly moving back into precious metals, signaling that smart money is positioning ahead of what could be a major market shift. Unlike slow, grinding gains, these moves tend to happen in jumps, sudden, sharp, and dramatic. Gold can quickly rally when confidence in fiat currencies falters, and silver often exaggerates that move, delivering even bigger short-term swings. Every time the dollar weakens structurally, this is the pattern we see. Gold stabilizes and prepares to leap, while silver reacts with amplified volatility. Right now, all the pieces are aligning, and the setup suggests that the next major move in metals could come sooner than most people expect. Looking ahead, there are several ways this dollar weakness could play out, and each has major implications for gold and silver, potentially creating some of the most dramatic market moves we've seen in years. If the dollar continues to fall, gold is likely to break through key resistance levels that have historically acted as ceilings, and every major dollar decline in the past has triggered sharp upward moves in gold. This could push gold to new all-time highs, as investors scramble for a safe haven to protect their wealth amid rising uncertainty and eroding confidence in fiat currency. Silver, which is naturally more volatile, could see an even more dramatic reaction. With supply historically tight and industrial demand rising across sectors like electronics, solar, and electric vehicles, a short squeeze could occur, forcing traders betting against silver to cover their positions. This type of cascade effect can accelerate price gains almost explosively, creating sudden and powerful spikes that catch many off guard. At the same time, cracks in the treasury market are another critical factor. If these cracks deepen, confidence in the U.S. financial system could falter quickly, causing panic across global markets. Investors would then rush en masse towards safe haven assets like gold and silver, driving sharp, fast-moving rallies. Unlike gradual price movements, these spikes tend to happen in sudden bursts, often fueled by fear and uncertainty rather than fundamental news alone. What's important to understand is that all these scenarios stem from the same underlying cause: a structurally weakening dollar. Recognizing these potential outcomes now gives investors and market observers a crucial advantage, allowing them to anticipate moves before the broader market reacts, rather than being caught off guard when metals start to surge. Whether you invest in gold and silver or not, the current weakness in the U.S. dollar is a historic warning that demands attention. Every major economic shift in modern history has started with a significant drop in confidence in the dollar, and what we're seeing today is no different. In fact, it may be even more pronounced. The markets are already reacting, insiders are quietly positioning themselves, and both gold and silver are reflecting the early stages of a potential surge that could be far larger than most expect. This isn't about creating panic. It's about understanding the signs and recognizing the patterns that have repeatedly signaled major financial turning points. Awareness now gives you the chance to observe carefully, think strategically, and prepare before the broader public even fully realizes what's happening. The dollar's structural weakness is not just a short-term blip. It's a signal that the foundation of trust in the U.S. currency is being tested, and when confidence falters at this level, the ripple effects are swift, dramatic, and far-reaching. Gold and silver are already responding, and historically, these metals don't wait for the crowd to catch on. The warning is clear, the signal is real, and the opportunity to pay attention and act wisely is right now, before the next major market move takes shape. Thanks for watching. If this video helped you, hit like and subscribe for the latest updates on gold, silver, and the U.S. dollar. Drop a comment below. Do you think gold and silver are about to spike, or is the dollar headed for more trouble? Stay sharp, stay informed, and turn on notifications so you catch the next big move in the market. See you in the next video.